elevation. Big blunts, dope boys wanna smoke with me. Now we ride double M's through the whole city. Niggas talking down, but they always feel me. A 9-figure nigga, all I wanna talk is business. I seen a big mouth get a closed casket. Self-made, took over the whole racket. A kilo after kilo, see who moved the most. 200-foot yacht, she wanna see the coast.
What's going on, YouTube? Welcome back to Goofy Investing, where we talk about investing in the stock market. This is the underground, all right? YouTube channel is kind of approaching 1,000 subscribers, so I'm happy about that. But very small YouTube channel, big value. We're going to be talking about a company here. We're going to be doing a ticker analysis for ticker U, all right? YOU, Clear Secure Incorporated. This is a stock that was requested. I don't remember who requested this ticker, but it was added to my list. If it was you that requested this ticker, shout out, comment down below. All right. So pretty clever ticker here. So you'd be investing in you. All right. But on a serious note, this trades on the New York Stock Exchange, $35.85 a share. These are Class A shares at a market cap of $4.77 billion. All right. Where trades on the New York Stock Exchange, I'll reiterate, and we'll talk a little bit about indice upgrade potential and so forth later. All right. New York, all right. Companies based in New York. What does it do? Well, they operate in secure identity platform under the Clear brand. Pretty much to sum it all up, they're right next to the TSA pre-checkpoint in airports where they use biometrics and have a separate lane to where customers that subscribe to their platform via through credit cards or direct, they go through this clear lane and they do biometric verification of identity through airports, and they get to cross the lines and bypass a lot of that whole waiting around in the actual airport. So that's pretty much the gist of it. Okay. Let's talk about some other things. Okay. We'll go to their financials. We'll do a sniff check on their balance sheet. 530.64 million in cash, 113.67 million in debt. Net cash position, great balance sheet. Enterprise values 3.11 billion. Okay. Looking to profitability metrics, great margins. Okay. 63.57 gross margin on the 5-year average. This we've seen some expansion on margin all across the board from their EBIT, EBITDA, and net income. So company is very profitable. Leverage free cash flow is at 25.32%. Okay. On a valuation perspective, this company trades at a below 4 times sales, on a trailing 3.96 times and a forward 3.91 times. Okay. Consensus analyst estimates. All right. 8 analysts on the bottom, or on the top side, and then 5 analysts on the bottom side. Analysts got this company growing double digits for the next couple years. All right. So let's look at their financial statement. All right. Sales from 2019 to trailing of today, 4x on the sales. Love to see it. Outpacing actual, how do you say it? It's outpacing their OPEX and so forth. So I like to see that everything that's in the right direction. Shares outstanding. Okay. Dilution happening, but very slowed down. This company does have a buyback running. One thing that caught my attention is the actual diluted weighted average share delta between their basic weighted average shares. So diluted weighted average shares outstanding takes under consideration anything dilutive in nature that would add shares to the actual balance. You do not like to see a big spread between the basic weighted average share count and the diluted weighted average share count. So there will be some dilutive pressures onto the actual company. All right. So that'll be something to consider. I'll talk more about that towards the end on the value proposition. All right. Let's look at cash. All right. From 2019 to trailing, cash is doubled. But we had an actual plateau or a peak in cash here in 2023 with a cash decline here of a couple 100 million, if you will, roughly on a balance error or rounding error. All right. Debt. Okay. Debt has been from 2022 to current debt has decreased. So balance sheet to debt ratio, I'm liking it. Okay, it's going in the okay direction, if you will. All right. Cash flow. All right. This is a cash flowing company. This is a company where you're going to get attributive yield from cash flows going into the equity as a return to the shareholders, and you're actually competing for corporate profits. So this company does have corporate profits of EPS and free cash flow. So when you're buying this company, you got both of them working towards your favor. All right. So my impression of the financials is very good. All right. I have a good impression of the financials thus far. Let's talk about some of the business model and so forth. All right. So, biometrics and membership of the clear lanes going through airports. They do have partnerships with credit cards. In fact, they landed a partnership with Amex here, which let me refresh this. I'm sorry. Okay. So apparently, American Express Platinum card members get access to the Clear membership here. But it's not exclusive. They have other partnerships, and they actually have direct membership lanes and so forth. But the actual fee rolled up into that actual credit card membership that they get with Amex, they have to pay these credit card companies for those actual memberships to be included into those credit cards. So not too much of a big deal, tell you the truth. I'd expect nothing less dealing with credit card companies. All right. Let's talk about this dividend. All right. They offer a dividend, 2.15% yield. We'll go to the dividend column and do some dividend analysis. Very rare on this channel where we get dividend analysis, but here we go. All right. So payout ratio is less than 30% of actual earnings and so forth. I'm feeling it. 2-year growth rate. Um, let's look at the actual growth on it. The dividend growth here on a 1-year basis is 31.58%. And dividend per share growth is 46.20%. In combination with the buybacks and them speeding up this dividend, they're growing this dividend real fast, and they're not paying out much of the earnings, which I love to see. Plenty of room for growth. I'd expect nothing less for this company to continue to grow the dividend. All right. And with their dividend history, you see slews of special dividends. All right. In 2023, they put out 2 special dividends. And in 2024, they put out one and then another one subsequently in 2025. Okay. So I'd expect the trend to continue. Listening to their earnings call, my impression of management. We'll talk about that. I really like this management team. All right, guys, they should put their face included into the actual their investor relations website because they're doing a great job. I'd like a personal more picture up here in an investor relations point of view. But all in all, I'm really impressed with their CEO. Carolyn Becker, Miss Becker, and there's CFO and president. All of them. I'm actually impressed with all of them. All right. So they're doing a real good job running a great business. Okay. So now that we got that out of the way, let's talk about some other stuff within the business model and macro factors. Okay. So they're growing members. All right. They're growing membership, but retention rate is around 80%. More enrollments on their growth to offset. So total cumulative enrollments in their bookings is continue to rise. But and then as you can see, their member count is right here. Now, here's something to consider. Travel has been lackluster. All right. The mode of travel and people, traveling has been a little bit depressed. Not much, more on a flat rate. But I'd expect a macro to catch up. So I'm expecting this company will get a tailwind with an increase in travel. And that's really the business model of this company. It's going to be very dependent on travel and so forth. There are some economic factors as well that come into it, the health of the consumer, their ability to enroll in credit cards, stuff like that. But all in all, travel is going to be it. All right. Balance sheet analysis. Everything checks out. Their PCAOB, regulated and auditing. Everything is good. Different classes of shareholder structure. Okay. So, oops, bear with me. So here's the breakdown of their share count. They have class A, B, C, and D shares. So four different classes of shares. I'm tracking B and D class shares outvote all the other shares. And these are more like founder and, original management share holders and so forth. So they get 20-1 votes against the class A shareholders, which would be shares that trade on the public New York Stock Exchange. The ones we're talking about right now are Class A shareholders. Okay. So participation in the different class of shares. Um, Class B and D shares and C shares is what I'm tracking, get tax incentivized treatments. Okay. So this is a company that is kind of embedded within governmental services, the FAA, and going through airports and federal security stuff. So they collect certain special tax treatments that other companies would not. And these specific shareholders would benefit off those tax treatments personally as well, that Class A shareholders would not be able to participate in. On top of that, the actual voting rights or voting powers of B and D shares outvote the Class A shareholders. Everything else, the Class A shareholders would be able to participate in. One thing we talked about going back to it trading on the New York Stock Exchange and indice upgrade. All right. I don't assess that this company will be eligible for S&P inclusion unless they clean up the different classes of shareholder stakes. So that's kind of a strike against this investment. But all in all, that doesn't necessarily preclude or exclude them from being able to drive value to actual shareholders. All right. If they're doing buybacks and paying dividends and growing with this business model, that's really intrinsically from the organic value perspective, that's all a shareholder should care about. All right. Me personally, looking at this from an investment perspective, I mean, I think that this is a company trading fairly. This is a good company that trades at a fair price, is what I assess. I assess what needs to make this a great company is the reduction in the shareholder class of A, B, and C. They need to just reduce down to maybe a dual class and actually just expire those other shares eventually. And it's something that I think that they will do, but not anytime soon. They need to bridge that gap between the diluted weighted average shares and their regular average share count right now. Okay. And they need to do that through buybacks. Okay. And they need expiration of those diluted weighted average shares, and they need to close that gap going forward. A shareholder into this company or an investor in this company should be keeping an eye on that as well moving forward. So let's talk about the investment. Okay. Is this a good investment? Is this a bad investment? And so forth. What do I think about it? I think that this is a really good investment for someone who doesn't want to take too much risk, but wants to actually participate in capital appreciation, but get dividends along the way. The hallmark of a great investment is if you buy shares, you never have to sell. I think that this is one of those long term great investments that if you buy shares of this company, you never have to sell. There is more growth to come. They're expanding into more airports. They have not saturated America just yet. So, saturation of the company will will the saturation of the country will follow. So that will provide them more sales growth and a tailwind of leisure of travel to be injected into the business as well. Management from their last earnings call, they are expected to expand margin more so. How much more can they expand that? Who knows? We'll see. But they're guiding that they're going to continue to be paying dividends and expanding margin. All right. And they're excited about the possibility of a reboom of travel. All right. So, technical analysis. All right. They started trading here in 2021, and then the stock since is down 25%. Means really nothing to me. I think that this stock short term, I think people can get in. I think the stock can go right back down to $30 and below, slightly in the high 20s. Probably get another opportunity, and that may be more of an attractive buying level now. But all in all, if someone is buying this thing now, this is the investment proposition in 5 years. I think that they double their stock in 5 years and they continue to grow this dividend. In fact, I expect the next 5 years thereafter a CAGR of 15 to 25% of capital appreciation and the growing a safe, growing, healthy dividend to follow in perpetuity, at least for the next 10, 20 years. Okay. So I can see this company becoming a dividend aristocrat, dividend king, whatever, and so forth when my hair is all gray or if I'm dead or whatever of old age. So I think that, this is a really great long-term investment. This is a company that I can feel good buying for my daughters or whatever in their portfolio, and I could sleep well at night. Is it for me personally? No. Okay. If you look at my portfolio, and quick disclosure, I don't own a piece of the company. If you look at my portfolio, you could tell none of my stocks pay dividends. I'm a more very aggressive growth investor. I'm after way more, bigger multi bags and 3 to 5 year targets, looking at 5 to 10x, whatever. And this company doesn't really fit that mold. I'm not really interested in, realizing capital via dividends right now, at least for now. Okay. So will that change here, when I'm maybe in my mid 40s, maybe, we'll see about that. But all in all, I'm still in the very aggressive growth phase. All right. So that's what I got. All right. I mean, I hope you guys got a lot of value out of this video. If you did, thumbs up, like, subscribe, comment down below, say I'm subscribed. I will respond back. Check out my Patreon. All right. I'm always putting out exclusive content on there. You get the latest and greatest of what I'm doing. You get deep dives, which has exclusive investor development content and research content that'll up your game as an investor via instructional coaching and so forth. $10 a month, really can't beat it. Plenty of members on there. I got there's a lot of highly sophisticated investors on there as well. Okay. 7 slots left, and check that out. All right. I appreciate all y'all support, y'all's recognition of value in my channel and interest, mean the world to me. I wouldn't have it any other way. I appreciate y'all. And until the next time, take it easy.